Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm so excited to welcome you to yet another promising edition of the Forex Morning Mastery, your daily dose of financial insights and trading strategies. My own name is Sharif Daramola, and for the next 35 minutes, I will be your host as we will be taking another fresh new look at the financial market using our basic tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory for price action for today. Yesterday I wasn't able to anchor the Forex Morning Mastery due to some personal issues that came up, but thank goodness I was able to sort things out and we're good. But unfortunately, we were not able to host the live session yesterday. But I did give an update as to how we will be managing our positions for yesterday, and I did give some updates during the course of the session. And of course, we were also part of the XAUUSD live monitoring session, which unfortunately, due to network issues, didn't last long, for about 2 or 3 hours, I think, before it went off. But it's okay and fine. The last 24 hours wasn't really active, as trading activities was more or less of a range bound perspective as market participants digest the recent US CPI data, which came in beyond expectations a couple of days ago. And today I am of the opinion that we may likely see some traction today based on what I'm seeing on the chart right now, of course revealing to me the character or the mindset of market participant within the respective financial environment. So ahead of today, I have interesting setups, in fact simple ones, that we will be using to guide our trading decisions for today. So I do encourage you to stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. For those of you who are joining us for the first time, I know you will be wondering what is going on here and what is it that we're really doing during the course of the session. Well, to simply put, I usually share a couple of videos during the course of the weekend, and the Forex Morning Mastery was born out of the necessity to do live follow-up details on this particular asset I'm looking at for every week. So the Forex Morning Mastery was born, and as technical traders, we usually gather here every day in anticipation of both the London and the New York session, reviewing our current position and of course doing follow-up details on the assets we are monitoring for the week. And officially the session kickstarts 9:05 a.m. West African time, 8:05 a.m. UTC, and I recommend that you always stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on. And it's also important for you to note that my aim here in this community is to equip you with the knowledge and skills necessary to make informed trading decisions independently. And trust me, the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information you gather here to make your own independent trading decisions. So once again, I welcome you on board and encourage you to actively engage in the comment section. So with that being said, here we will be diving right into the business, and as usual, the first thing we normally do is to keep tabs with the fundamental factors that will be affecting the market sentiment today. And for those of you who have been with me for a while now, you know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movement. Now, by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the assets we have been monitoring since the beginning of the week, we have been focusing on economic features from both the United States and the Japanese economic docket. Though the week hasn't really been laced with high impactful events, so we have to include the mid-tier economic features so that we can have a broader view into what participants will be looking forward to. And of course, we know how this event usually influence the market sentiment, especially as market participants, especially when the event draws near. Now, so far this week, we've had some couple of speeches from the US Fed officials, which of course had emphasized the potential of interest rates staying higher for an extended period of time due to the inflationary pressure they suspect in the United States economic docket. Well, on Tuesday, February 13th, we had the Consumer Price Index, which was the most anticipated event for the week. And of course, it is considered as an inflationary gauge into the pressure of inflation in the United States. And of course, it came in beyond expectations at 3.1%, giving us a positive deviation of 1.96 to further emphasize that inflation in the United States is high. Well, a couple of weeks ago, we did talk about the Fed chairman's speech during the FOMC press conference, where he also reinstated and emphasized that inflation in the United States is quite high, and the idea of a rate cut as early as the month of March may not be on the table at all. And with this data here, it further affirmed this hawkish remark by the Fed chairman, and of course Fed officials too have been buttressing this in the last couple of weeks. And as a result of this data, we saw how the US dollar gained some positive traction following that event, resulting in a very strong impulsive move, giving us some significant amount of profit across the assets on our watch list. So we are going to be looking at those in detail and see how we manage this position, and of course prepare ourselves for today. Then yesterday, Wednesday, February 14th, we had some couple of speech, though I'm here to have an highlight into what really happened. What did they really say in those speeches? But the most important one, based on the USDJPY asset we have been monitoring for this week, was the gross domestic product annualized for quarter four in the Japanese economic docket. Now, for those of us who do not know how important this event is, well, it is usually considered to be an event that gives us an insight into how the economy of any particular country has grown in the last quarter. And if it expands, it shows that the economy is growing very well. That is, if the data comes in beyond expectation. But if the data comes in below expectation, what it simply tells us is that the economy is contracting, hereby may dovetail to negative traction in against the currency of that economy. Now, looking at the data that came in from the Japanese economic docket yesterday, we had a deficit of 0.4%, which was way below the 1.4% that was expected. And of course, though it was better than the previous quarter, which came in at a deficit of 3.3. So we had a deficit of 0.4%, which is not really a good sign at all as regards to the Japanese economy. And the market, in one way, interestingly, had reacted positively to that data, as we saw during the Asian session, how the Japanese yen attracted some buying activity, resulting in a midterm, I will say, bearish momentum on the USDJPY, triggering a sell stop order. We are going to be looking at that in a moment and see how we will be managing the process, and of course tell you what I think and what my ideas are based on how market participants had reacted to that structure. So for today, Thursday, February 15th, we have a couple of high impactful events from the United States, but I also went further to include some other some mid-tier economic features so that we can definitely have an insight into what may influence the market sentiment for today. So on our list here, hold on a second please. Okay, so on our list here, the first impactful event here is the retail sales data. And for those who don't know, the retail sales data is a key economic indicator that measures the receipt of retail stores, representing consumer spending. And its impact on market sentiment can be considered very significant, as it provides insight into the health of the US economy and, of course, consumers' confidence in the US economy. And this may likely influence expectation about future economic growth, depending on what the data comes up with. Now, if the data comes in beyond expectation, it is considered as positive, giving positive traction in favor of the US dollar. Now, if we look at the retail sales data here and looking at the data that came in for the previous month of December, it came in at 0.6% expansion. And we see what economists are projecting right now at a deficit of 0.1. Now, what this simply means is that based on what economists are saying right now, that it is very likely that consumers are not having confidence in the economy because of what they are looking forward to. So what will the actual data be? Will it be just as expected, below expectations, or even beyond expectations? Then there are other events here which we are going to be looking forward to. So I will just be talking about the major ones which I think will have a major impact in the financial landscape today. Now, we are going to be looking forward to Bostic's speech. Raphael Bostic is an American economist, and of course is also the CEO of the Federal Reserve Bank of Atlanta. And he serves as a voting member of the FOMC too as well, which makes his speech carry a lot of weight today. Then we're also looking forward to Wallace. Wallace is going to be having a speech later today. Christopher Waller is a member of the Board of Governors of the Federal Reserve, and is going to be speaking in about 9-10 hours from now. So we want to be having our timing for that event, as we want to see what he will be saying. So both of them, their speeches hold quite some weight, as they will be giving us, especially after the CPI data that came in a couple of days ago. Market participants will want to be seeing how what they are going to be saying following the CPI data, and definitely whatever they say today will give market participants an idea into the trajectory of the easing cycle of the Federal Reserve for the year 2024. So it's a very, very important event everyone will be looking forward to. Then we have the New York Empire State Manufacturing Index, which gauges business conditions for New York manufacturers. And generally speaking, a positive result here indicates bullish for the US dollar, while a negative result will definitely portray a contraction in that economy, in that sector, sorry. So we are looking forward to the previous data came in at a deficit of 43.7, which wasn't that very impressive at all. But based on what is on the ground, economists are projecting there's a little bit of contraction, though still a little bit on the downside of deficit of 15. So we look forward to see what the actual data is going to be on that one. Then the other one we are looking forward to again is the Philadelphia Fed Manufacturing Survey, which serves as an indicator of the manufacturing sector's trend in the is interrelated to the ISM Manufacturing Index too as well. And of course, above expectation figure is considered to be a positive signal in favor of the US dollar. So looking at what we have here, economists are also projecting something higher than the previous month. So things are looking very rosy for the US economy at this point in time, and there's a likelihood of the US dollar continue its bullish traction as it started a couple of days ago. So we are going to be looking at how we are going to be positioning ourselves for the next move. And as technical traders, we do know that the anticipation of this event has a way of influencing the market sentiment, as they will definitely be anticipating this event, and even close to the timing of that event, major key players will have an insight into what will be reported, and as a result of this, they will build their position ahead of this event. So as technical traders, we want to be sniffing the chart to look out for patterns and structures revealing the trails of these key players, so that we can use them to strategically position ourselves for the next move. So with that being said, here let's dive right into the business. So as usual, I loaded up my USOILSPOT earlier than expected so that we can be right on point. But I will ask for your permission to give me about 2 minutes. I want to sort out some personal issues, and I will be right back. I won't take too long. Please bear with me, please. I'll be right back in a moment. Thank you very much. All right, I'm back, and sorry for the break. I had to sort out some personal issues, but I think we are good to go right now. So the first asset we are going to be taking on this morning is going to be the USOILSPOT. And on the USOILSPOT, we've had quite an interesting situation since the beginning of the week. We've had situations where we have been buying this asset since the beginning of the week, and in fact we had multiple entries to maximize the potential of that uptrend. And then during the course of yesterday's trading session, though I wasn't around to anchor the Forex Morning Mastery, but I did a session on the X-Trend Speed technical tutorial, price action tutorial session, which of course I did uploaded on my YouTube channel, where I did emphasize that the ascending trend line we identified at the beginning of the week is going to be playing a major role in guiding our trading decision. And of course, I did mention yesterday that if price action goes ahead to break down the ascending trend line, then the breakdown of the $77.20 level will be triggering a sell position. Now, for the sake of those who are not part of our earlier sessions, please quickly note that we wouldn't be doing a top-down analysis on this asset. Basically, we only focus on the 1 hour time frame. However, if you want to have a background knowledge of how we got to this point, our first edition for the week, I did a top-down analysis on this asset, and there we were able to identify key levels, chart patterns, and trend lines that we will be using for the week. So if you missed out on that session, please check the link right in the description box of this current video you're watching, and you will be referred to that first edition, where you can use it as an educational tool to understand the market structure of the USOILSPOT. All right, so with that being said, let's go back into the chart and let's look at how the week started for us all on the US All Sport and what led to the decisions we made. So at the beginning of the week, we had a situation where price action was initially confined within oscillating just right around our key level, had the $76.50 area. And of course, you know how we use our key levels in this community. As long as price remains below the key level, we will be looking out for patterns and structures that support the idea of selling that asset. However, if price breaks above the key level, then we want to be looking out for opportunities to buy. So at the beginning of the week, price was ranging between the $76.58 level and the $76.26 area to emphasize the prevailing uncertainty in the market at that particular point in time. And usually whenever we identify such structure in our chart, we exercise patience and wait for price action to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. Now, prior to our live session on Monday, we already had a breakdown of the support line of that range. So we said we will be selling the retest of that structure, and in fact price came back to retest the structure to trigger our first sell position for the week, and we saw price move over 70-80 pips thereabout before the bullish momentum came in. And as it is our style here, whenever price action moves in our favor significantly, we move our stop losses to secure the position. And if you have done so, you must have been taken out with a small profit or at a worst case scenario break even. Then we saw the engulfing candle begin the week's momentum as we saw price action lead to the breakout of that resistance zone, and with a buy stop order sitting above that area, we had our first buy position triggered. And since that moment, we have been buying this asset, adding more buy positions at levels that we identified had the $76.80 level, $77.20 area, and of course the $78 area, which of course did not last very well yesterday before the bearish momentum came in, taking us out of that position. And that bearish momentum yesterday led to the breakdown of that ascending trend line we said we will be using to guide our uptrend momentum. As you will see here, it got broken to the downside, negating the bullish idea, and of course with a position right below the $77.20 area, we had our sell position triggered yesterday. And of course price went on to break down the key level, had the $76 area, $76.50 area to trigger another sell position. And as at this morning, I think about 15 minutes ago, price broke down the latest support line we identified, had the $75.84 level during my commentary this morning, and that one right now is not doing very well. As you will see, price is running in a loss on that particular one. And considering the sensitivity of this particular area around the $75.84 level, which of course has a memory for buying power, as you will see what happened exactly around that same area at the beginning of the week. We saw how it became difficult for sellers to break through. As soon as price got into that area, we saw how buyers came in to negate all attempt by the sellers to break through that structure. And the same thing appears to be happening right now as price is back into the structure as it did at the beginning of the week. So it's a very, very sensitive area. So at this juncture, I will encourage us all to move all our stop losses accordingly and secure this current sell position. And if you would ask me, anywhere around our key level at the $76.50 area seems most appropriate to have all stop losses keyed to. And one thing we also want to take note is that when we move our stop losses, we try as much as possible to give enough breathing space for price action to move around. So please, let's secure all sell positions at this juncture. And with a secured position here, what is going to be our next line of action for today? Are we going to continue selling this asset, or are there chances that the $75.84 level will become a platform that will incite another wave of bullish momentum. Now, following the closure of our buy position yesterday, which resulted in that strong bearish move, you will be wondering what really has happened that led to that strong bearish momentum, that sudden change in character in the market. Well, one of the things I think would have happened was probably the report from the EIA, that is the Energy Information Administration, who reported a surge in their stockpile to approximately, I think it was around 12.3 million barrels for the week that ended February 9th. And that's for us is a sign that there is a high supply compared to the level of demand. So when there is a high stockpile, it simply shows that the demand does not meet the supply. And when there is high supply, what happens? The price definitely will crash. Now, the immediate reaction by the market participant was negative to this asset, as we saw price drop significantly, well, specifically due to this report. However, in contrast, we also had the report from the OPEC Plus members yesterday, who were projecting a 2.2 billion barrels per day increase in global oil demand by 2024 and 1.85 million barrels per day rise by 2025. But personally, if you ask me, I'm not buying this. OPEC Plus can cook any number just to make sure, just artificially increase the demand for oil. So it's not something a market participant will take with a lot of significance at this point in time. And of course, we saw what happened yesterday. Market wasn't really buying into that idea, and price continues to drop to the downside. Now, another factor that could stabilize the price of oil, that is limit the downside of oil, is the recent escalating tensions in the Middle East. And we heard about the Israel strike in Lebanon yesterday, which was in response to the rocket launch into northern Israel a couple of days ago. And this further could support crude oil prices, as the concerns for disruption of oil supply could still be lingering in the financial landscape at this point. So if you look at what has been going on here throughout the Asian session, stroke the early hours of the United Kingdom session, you will see that the market has been a little bit consolidating. Look at what has been going on around here, further emphasizing the uncertainty going on around this point. The same thing is also happened at the beginning of the week, just exactly around that area. And at the beginning of the week, that area resulted in an engulfing bullish candle, taking price out of that particular structure. And at this point, I am of the opinion that market participants may want to step aside and wait for fresh impetus to give an insight into what may likely happen. And as a result of this, market participant may be turning to the US economic calendar today. We did talk about the economic features coming in from the United States, and of course, this asset being a US denominated asset, whatever happens in the US economy will be affecting this asset. So in the meantime, market participants may likely look forward to some of these events to give fresh impetus into this market, and as a result, we need to be very, very careful. Hence, how do we intend to strategically position ourselves for the next move? Now, looking at things from a technical standpoint, let me zoom right into the current structure. You will see that in the last 1, 2, 3, 4, 5, 6, 7, 8 price action has been more or less range bound, to further emphasize the uncertainty going on in this market at this point. Now, one thing I would also like to emphasize here is the fact that price is trading below the support line of that range we identified at the beginning of the week, which, and of course below the key level at the $76.50 area. So what this simply means is that since price still remains below the key level, let's still continue to look out for signs that sellers may come in at any point in time. So we shall be looking out for more structures that supports the idea of selling. But if price goes ahead to break out of the $76.50 level, then I want to be considering buying. And being for the fact that we're on the positive side of our portfolio on the US All Spot, we can place a buy stop order above the $76.50 level and leverage on some of the profit we had made so far this week to test water around that area and see if it's going to work. So placing a buy stop order above the $76.50 level makes quite a lot of sense. Let's see how far that will go, and then have your stop losses. We need to give a wide room for stop loss here because of the volatility that will happen today due to the economic features from the United States. So we should be looking at 55 pips stop loss on this one, and let's see how far the momentum will go. So I will definitely be giving you update on both my trading view and Telegram platform as we continue to monitor price action here. We maintain bearish bias if price breaks down the $75.84 level. So for those of us who did capitalize on that one, we will be in the loss. But for those of us who are yet to, a sell stop order below the $75.84 level makes quite a lot of sense. However, if you are new with us, I would advise you, since you don't have any profit to leverage on, please wait for confirmations like a retest of structure on the lower time frame before jumping into any sell position. So this is my simple view on the US All Spot for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 5-10 seconds to see if there are any questions whatsoever before we move on to the next asset on our watch list. And you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. All right. So I see your comment, Rory Sang. Sekilo, good morning to you. Glad to have you around with us this morning. And you said I should move the camera shot to the corner so that we can see the background. All right. Fortunately, I don't know where I can put it. I think that's the most appropriate area I can put it to have a better view into what is going on in the chart. Since we are only focusing on the right hand side of the chart, we are not focusing on the left hand side of the chart, so that is why I place it at that particular area. Our center of focus is where price action is going, not where price action has been. So that's simply the reason why I place it there. So where we are focusing on is the future. Where price is going is where we are looking at. So I hope you don't mind, Rory Sang. All right, so in the absence of no questions, I want to assume that we are all on the same page, and I do hope you've marked out those levels accordingly. So with that being said, we will be moving on to the next asset on our watch list. So the next asset on our watch list for today is the USDJPY. And first of all, I would like to say that for those of us who are taking advantage of the sell position yesterday, please let's safeguard all our sell positions right now by moving our stop losses to, at a worst case scenario, break even while we continue to monitor price action at this point. The Japanese yen witnessed some buying interest despite a contracting economy, and this may be as a result of there are two factors here, both from the fundamental and of course technical perspective. Now if we look at the fundamental perspective, I can remember telling you a couple of weeks ago, following the hawkish remarks by the Bank of Japan governor Ueda, when he mentioned that there is the possibility of the Bank of Japan pivoting from their current ultra loose monetary policy is becoming more visible as inflation gradually between the month of March/April, giving buyers of safe haven Japanese yen a glimmer of hope of buying the yen at any point in time. Though this hawkish remark gave some positive traction to the Japanese yen a couple of weeks ago, and of course we saw something like that happen last week before the Bank of Japan's deputy governor emphasized that though the bank is moving towards pivoting from their current ultra loose monetary policy, but the hike in interest rate would not be as dramatic as expected. They are going to be very cautious in increasing interest rate, and this doesn't sound well for buyers of safe haven Japanese yen. So what did they do? They moved negatively against the Japanese yen, and we saw how the dollar rose significantly against the yen in the last 1 week. Now, of the opinion that from a fundamental perspective, we may be looking at some signs of buying hope for the Japanese yen due to the recent verbal intervention by the Bank of Japan policymaker. Is a financial policymaker yesterday, Manoto or something, I can't remember his name, where he emphasized that the Bank of Japan is ready to intervene in the forex market, and this of course has led into some fear in the market. So those who are holding on to the US dollar had been trying to take some profit off the chart, which may result into a retracement move, and this is likely what may have been happening at this point. Then from a technical standpoint, we all know that when price action finds an impulsive move in a particular direction, at a point in time we would likely see a retracement move in anticipation of the second leg of the momentum. So these are two factors that we are looking at this point in time. Hence we need to be very, very careful to make an informed trading decisions. And one thing we also want to take into consideration is the fact that the Japanese economy contracted. We talked about this earlier, by 0.4%, which was way below market expectations of 1.4% growth. Now, the possibility of a delayed Fed rate cut may continue to support the US dollar and restrict losses on the USDJPY. And recently we saw how the US Treasury bond yields have been finding some bearish momentum lately, which and of course we know how interrelated the US dollar and the US Treasury bond yield is. If the Treasury bond drops, definitely the dollar will follow suit, and this may likely be what is going on here. Now, from a technical standpoint, how do we intend to position ourselves for the next move? That's the most important questions right now. And of course we have some factors, so we have some structures on the chart which we will be using to guide our decisions. Now, since the beginning of the week we have been buying this asset. Remember, we identified a range between the 149.325 and the 149.080 area, which was broken. We saw it come back to retest the structure, and then we saw this huge engulfing candle take price to a recent high a couple of days ago. Now, we had this ascending trend line at the beginning of the week, which was actually supporting our bullish idea. But since this ascending trend line has been broken, we have a new one that we will definitely be using to guide our decisions going forward. And this is this one right here, which I have depicted in a lighter color. So let me just thicken the color a little bit so we can see things clearly. I hope you can see my screen clearly. So we have a new ascending trend line which we will be using to guide our trading decisions for today. How we use our ascending trend lines in this community: as long as price action remains above the ascending trend line, we shall continue to look out for patterns and structures that support the idea of buying that asset. Now look at what has been going on right now. Price action seems to be gradually approaching that ascending trend line. Now, looking at the structure following that impulsive move, the right question we want to be asking at this juncture is: how far will this bearish momentum go before another wave of bullish momentum will happen? Will it come back and just retest the trend line and incite an uptrend continuation? Or are we going to be seeing a situation where price will retrace into our golden zone area, which is usually between the 50 and the 78.6% of that previous impulse leg? So if we are going to bring out our Fibonacci retracement tool, run it through the previous impulse leg, we should be having something like this. And our golden zone area is going to be between the 50, like you will see here, and the 149.600 area, just right around our key level for this week. So I always like my golden zone area to be marked with a light yellow. So let's mark that out, and then we will label this a potential demand zone, which is going to be between the 150.00 and 149.600, 150.00 and 149.600. Remember, this is our key level for this week. And for those of you who do not know how we got this key level, I encourage you to watch my top-down analysis on this asset. The links are right in the description box of this current video. Okay, so we have this right here, and so we have a potential demand zone right here. So this is where our golden zone is, and look at how beautifully it shares a confluence between the ascending trend line and that key level situated at the 149.600 area. So we have a beautiful area looking out for buying opportunities here. So what are we going to be looking out for? Well, we want to look out for reversal patterns like double bottom structures, head and shoulder patterns, or falling wedge within this area, and then mark out the neckline of those patterns, and then we buy the breakout of this neckline, as the breakout will have validated the potency of that reversal pattern. So to give a visual representation of what I'm talking about, so we have an impulsive move, price appears to be going through a retracement move, and if price gets into any part here, we are looking forward to maybe a double bottom structure, head and shoulder, any form of reversal pattern, mark out the neckline, and then we buy the neckline. So what this simply means is that the bullish outlook in this market, despite the buying activities of the Japanese yen, with the bullish outlook is still looking very intact. So let's see how the market will play out. This could take about 2-3 hours before the formation happens, so let's exercise patience. I will definitely be giving you updates on both my TradingView and Telegram platform if I find any setup unfold around this area. However, while we're looking out for setups, I would advise that we place, this is for those of us who are profitable on this asset so far this week, place a buy stop order above the 150.400. Pending the time we look out for any setup. If we see any setup, we can actually buy before the breakout of the 150.400. So this is my simple view on the USDJPY for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will take the next 5 to 10 seconds to see if there are any questions before we move on to the next asset on our watch list. All right. All right, all right. In the absence of no questions, I want to assume that we are all on the same page, and in that regard, we'll move on to the next asset. And please, we have more than 10 people on board. Please kindly click on that like button. Your thumbs up are very valuable to me, as it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them, and at the same time result in the growth of this community. And let's support the channel to grow, and thank you very much as you do so. Just click on the like button, and for those of you who had clicked on the like button, thank you very much as you do so. So moving on to the next asset on our watch list. So the next asset and final asset on our watch list for today is my favorite asset, and that is the XAUUSD, popularly known as the gold spot. And in fact, I can say that the gold spot happens to be one of the most profitable assets on our watch list for this week, as we were able to scoop in over 700 pips from that sell position that happened a couple of days ago to record a positive phase to our portfolio. And for those of us who capitalized on this opportunity, well done, and kudos to you for being on standby to capitalize on this move. For those of us who still have a sell position running right now, I'm of the opinion that you move your stop losses to secure the current position, as currently for me, I'm out of this position, and you should be out anyways for those of us who have been following my commentaries on and updates on this particular asset. As I did mention yesterday during my extreme speed price action tutorial, that we should move all stop losses to that area around the $1,995.50 level, which got triggered later yesterday. And well done to everybody who had capitalized on this opportunity. Now, if we look at what has been going on in this market, it's quite interesting that in the last 48 hours, price action has been range bound. As you will see, price has been confined within the $1,995.50 level and the $1,988.50 area to emphasize the prevailing uncertainty in this market at this particular point in time. Now, the increase in consensus that the Federal Reserve will maintain higher interest rate for an extended period of time has reinforced unexpectedly high US inflation data, which was released yesterday on Tuesday, and this has continued to serve as a barrier for the gold assets to continue its uptrend move. Now, meanwhile, the US dollar, on the other hand, is lacking some bullish conviction due to the ongoing decline in the US Treasury bond yield, which in my own opinion may be a retracement of the surge in the bond. Now, this coupled with apprehensions regarding the geopolitical risk arising from conflict in the Middle East may provide some support for the XAUUSD. So we should not ignore the potentials that buyers can also still come into this market due to the geopolitical tensions in the Middle East. So as a result of these factors that I've said here, we need to exercise caution before initiating any new bearish or bullish position on this particular asset. Now, one of the reasons why I would say that we should exercise caution is simply because of the character of market participant here in the last 48 hours, as I'm of the opinion they may be looking forward to fresh impetus, especially after the USCPI data, before making any aggressive bet going forward. And considering the fact that we are looking forward to a couple of speeches from Fed officials later today, market participants may want to exercise patience to see or hear what these Fed officials will say following the CPI data to make any informed trading decision. And of course, we can see that reflect on the chart as a consolidation phase. And we also have some other couple of media tier economic features, and of course the retail sales data. We talked about this earlier, which can serve as a catalyst for short-term trading opportunities on this particular asset. So as it is right now, how do we intend to capitalize on the next move? How do we want to position ourselves for the next move? Well, first of all, you know how we use our ranges whenever we identify them on the chart. Whenever we have a range like this where price is confined within a specified zone, we usually exercise patience and wait for either a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And as it is right now, the market is in a limbo, and let's talk about the potentials of the sellers first, considering the strong bearish move from Tuesday's trading session. Now, this old range here could transition, after considering the impulsive move right into the structure, could transition into a downtrend continuation pattern, let's say a bearish rectangle, where the breakdown of the support line could be all we need to join a bearish move. And at the same time, it could serve as a reversal pattern, as I'm beginning to see something like a head and shoulder pattern, but it's not really a head and shoulder, but it's close to an head and shoulder pattern. Let me give you a visual representation of what I'm talking about here. Now, if we consider the impulsive move right into this area, we see something like the left shoulder, then we have something like the head right here, and of course you can see price is some way, somehow finding higher lows here, as price is yet to come even close to the previous left shoulder that we have here, giving us something like this, where the resistance line at the $1,995.50 level could be serving as the neckline of this reversal pattern, where the breakout of the structure will be validating the potency of that reversal pattern. So we are not going to be negating any possibilities of buyers coming into this market. Then another thing I would like to call our attention to within this range is the fact that since price action tested the 1,984 right here during the later part of the New York session, you would notice that price action had uniformly and consistently found higher lows. And when we notice higher lows on our chart, it is a sign that buyers are gradually gaining momentum behind the scenes. And to further affirm this, we want to be connecting the series of higher lows here, giving us a trend line to work with. And if we do that correctly, we should be having something like this. So I encourage us all to mark out this trend line on our chart, as we will be needing it as a reference point to guide our trading decisions for today. So I would like to thicken it a little bit to emphasize its importance. So if we bring back our candle chart, let's do some little adjustment to capture all the pivots around this area, so we have something like this to work with. Now, what this simply means is that we can afford to place a buy stop order above the $1,995.50 level, since price action remains above the trend line, and have a stop loss right below the trend line, dovetailing to between 35 to 45 pips on stop loss, giving enough breathing space for price action to move around. Let's see if it's going to work out. If it doesn't, well, fine, good. We know that we are only risking some of the profits we made so far this week. So buying above the $1,995.50 level makes quite a lot of sense at this particular point in time. However, if price action goes ahead to break down this ascending trend line for the first time in the last 18 hours or 20 hours or so, then we might begin to get ready to sell. But if I'm going to be selling, I would like to see some confirmation that truly sellers are going to be dictating the pace going forward. And what is it I would like to see here is a confirmation in the form of a retest of that ascending trend line before I join the bearish move, and then with a sell stop order below the $1,988.50 level, we will be adding more sell positions to our existing trade to maximize the potential of that bearish move. So this is my simple view on the XAUUSD for today. You can see it's a simple trading setup where our center of focus for today is between the $1,995.50 level and the $1,988.50 area, where depending on the direction of the breakout will give us an insight into where price action will be going for today. And trust me, I will be with you in the comment section of both my trading view and Telegram platforms to give you update as at when due. And for those of you who are going to be part of the XAUUSD live monitoring window later today, definitely you have the privilege of being with us real time as we continue to monitor price action. So I already dropped the link to the XAUUSD live window right in the comment section below. So you want to be clicking on that link, click on the notify me button so you can get notified as soon as we come on live. For those who do not know, the XAUUSD live window was a platform born out of popular demand from members of this community, where we usually come together during the New York session to monitor real-time price action on this particular asset. So it often starts about 5 to 10 minutes into the New York session and lasts for about 5 to 7 hours depending on the intensity of trading activities for that day. So I would like to see you right in that comment section of this platform as we make it an eventful one. So it's on this note I would like to say we are done on the XAUUSD, but if you have any questions whatsoever, feel free to let me know in the comment section, as I'm here and willing to be of help in that regard. So before we round off on today's Forex Morning Mastery session, I will take the next 5-10 seconds to see if there are any questions before we go ahead to round off on today's session. And please do not forget to give the video a thumbs up. Your likes are very, very valuable to me. It means a lot to me, and it also helps the algorithm promote the video to a wider audience of traders who may find the content beneficial to them. It doesn't cost you anything. Just click on the like button, and this is the cheapest way you can actually support this project to grow. And thank you very much as you do so. And for those who had already liked, thank you very much. One love to you guys. So let's see if there are any questions before we round off on today's Forex Morning Mastery. All right, thank you very much guys for the likes. I really do appreciate your support. For those who had already clicked on the like button, thank you very much. And it's on this note I would like to say that we are at the end of today's Forex Morning Mastery session. It has been a wonderful moment with you guys. I really enjoyed every single moment with you, and so far we were able to attend to the 3 financial assets on our watch list for this week, which includes the USOILSPOT, the USDJPY, and the XAUUSD, where we were able to identify simple trading setups that we are going to be using to manage our positions and strategically position ourselves for the next move. I do hope you marked out these levels on your chart. If you have done so, well done and kudos to you. So all we just need to do right now is exercise patience and allow the structures to mature. And for those of you who are joining us for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today. If you did, you want to be part of our subsequent editions. Trust me, the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information you gather here to make your own independent trading decisions. So it's on this note I wish us all the best of luck, and always remember the Forex market is an environment full of uncertainties, and we should understand that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. And with this understanding, you do want to be having a well-defined risk management strategy in place so that you can mitigate against any risk that may come against our particular direction. So please take note of this. So on this note, I want to wish us all the best of luck today, and looking forward to seeing you same time tomorrow, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing, and of course prepare for tomorrow's trading session, which promises to be another exciting one as we gradually head into the final day of the week, which of course we know has some peculiarity that has to do with rounding off of trading activities, and of course it tends to have strong traction in that regard. So we do want to be on standby to capitalize on that opportunity too as well, so you don't want to miss out on that session. So I wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.